Welcome to the Payments Trilogue, where 3 seasoned professionals discuss payments and more, for Europe and beyond.
Hello, my name is Michael Salmony, and Ralph and Javier and I would like to welcome you to another episode of the Payments Trilogue, where this time we have another long-standing friend joining us, Mark Munne, who's now at the BIS. The BIS is famous throughout the banking world, of course, because they do the Basel II and Basel III standards about sort of compliance and interoperation. I always think of them as sort of the meta-organization across central banks, but you can correct me on that. But the reason why we're here is because they also do a lot of stuff in payments, especially payment innovations. And their Embridge is very famous, but there are others like Aperta and Nexus, which we will be talking about today, and Icebreaker, and I think about 20 projects going even into quantum use in payments. So maybe, Mark, you can tell us a little bit about the BIS yourself and then get us into Nexus.
Yeah, absolutely. Well, thank you, Michael. I'm happy to be here. See some old friends in the podcast. So I've been working in payments for I guess about 20 years now, and I've been luckily involved in some of the big movements in payments. Started in the migration to SEPA, then moved on to instant payments, where I met Michael and Ralph at the time. Did some stints in open banking, but about 4.5 years ago, I got involved in the BIS, specifically the BIS Innovation Hub in Singapore. So the BIS a couple of years ago started opening up innovation hubs all across the globe, where they launched innovative projects. As the name suggests, I guess. One of those projects is Project Nexus. And if you at the time, so this was about 4.5-5 years ago, we had about 70 countries in the world either had implemented instant payments or were in the process of implementing instant payments. And today that number is already reached over 100, but all these initiatives were very focused on solving the issue domestically, which is, of course, a very, very valid use case. It's 95% of the total volume in such a country. So it addresses a very, very real problem, and that's very good. But it is very difficult to tell customers that you can transfer money to your neighbor within 5 or 10 seconds. But the moment you do that cross-border, it suddenly becomes very expensive, it becomes very slow, it becomes very opaque on when that transaction happened, how that transaction happened. So we already saw, especially in Southeast Asia, a few initiatives across the globe, but especially in Southeast Asia, you saw that a few of those countries started working together and forming bilateral connections. So Singapore built a connection to Malaysia, built a connection to Thailand, was in the process of building a connection to India. What they quickly found out was that each of those connections was a project. It was a bespoke connection between two systems that were built to solve a domestic problem. And that was actually the starting point at the BIS to start looking at, okay, this works for solving that bilateral connection, but this doesn't scale globally. So what would a multilateral connection, what would that look like, and how can we solve that issue? And that was actually the start of Project Nexus. And about 4.5 years ago, one of my good friends, Fred Mayer, was working at the World Bank and got in touch with the BIS in Singapore. And that's Fred called Paul van der Valk, another good friend of mine. Paul called me, and the three of us actually got involved in Project Nexus, writing the first white paper, and onwards to the 4 years of different phases across that project.
Can you explain maybe a little bit why it's so difficult, why you needed a project, as you say? I mean, you could naively think everybody's doing instant, everybody's doing ISO 20022, they're all central banks who talk to each other. Why is everything so different and so difficult?
Yeah, very good question. I guess there are three layers at which you can look at this at this problem. So the first one is, I guess, the basic one, which is technical. So as you mentioned, they all use ISO 22, but they all use ISO 22 in their domestic context, which means that the good thing about the standard is we've got so many. They've all done their slight variations in that context. So first, you have to do a mapping. And some of the technology behind each of these systems is slightly different. This one is API based. That one uses MQ. There are different security standards. So on a technical level, you need to work through a process of connecting these systems. Notwithstanding that kind of technology, and Nexus, that's actually the easy part. You know, we can solve things in technology. But the next level is, if you look at the actual process, each of these processes are slightly different. Some of them use a 5-leg process, some of them use a 4-leg process. Finality rules are slightly different. Dispute management works slightly different. You need to have a scheme that oversees the rules and things like eligibility, who can join the system, all slightly different from each of these jurisdictions. So you need to have a scheme. And then on I guess the third level is then the financials, the business case. So again, for each of these jurisdictions, the market operates slightly differently. So for each of these bilateral corridors that they're building, it's a discussion on technology, it's a discussion on scheme, compliance, eligibility. Can we allow e-wallets to join the system? And then there's a third discussion on who is paying who makes money out of this, what do we do with the FX rate, who is making margin. So it's on those three levels that they need to agree upon. And what they saw is, for each of those corridors, each of those three layers involve another discussion.
Exactly. So I think there is a lot to unpack here. You mentioned a lot. If I could maybe start at the beginning, I think it was the technical side. So who? Okay, so going back to my math studies, so I do remember the n times n minus 1 divided by 2 problem of avoiding bilateral connections and having a multilateral one via a hub in the middle. Very, of course, important concept. But so everyone has only one connection into the central system, but now who is and so each one of those parties, countries, regions, whatever systems, instant payment systems, they have their own mechanics, and then BIS has a central, Nexus has the central one on their side, and you need this translation in between. Who is doing the work? Is it Nexus or is it the party connecting?
Yeah. So first, just a slight correction. So this was a project that originated 4.5 years ago from the BIS Innovation Hub. It went through 4 phases: an initial vision paper, a proof of concept, a detailed technical design, and then actually a detailed operational design. As of earlier this year, that project now spun out of the BIS and is its own company. So it's Nexus Global Payments. It's a non-profit which is incorporated in Singapore. The 5 central banks in the region are our shareholders, but the BIS has moved from running that project into a more advisory, consultative role, where the Nexus is now its own thing. And I'm employed by Nexus, not by the BIS at this stage. That said, if you look at how Nexus addresses that problem, you're very right. The instant payment system in a country is responsible for connecting all the banks, and they have their own processing, and they have their own set of processes, and they connect into a Nexus gateway, into the Nexus hub, if you will. The workload of connecting, I guess, is a bit shared between all of those, between all of those parties. There's some stuff that the banks will need to do. They'll need to implement certain APIs. They'll need to potentially update their mobile banking environment to allow for Nexus payments to be initiated by the end customer. There's some work that needs to be done by the banks that are participating. Again, they'll need to implement some of the Nexus processes. The same is true for the IPSO. If you purely look at the message stack, the interface between the instant payment system and the Nexus gateway is a standardized message definition. So we have defined a Nexus message implementation guideline based on the work that CPMI has done, based on the work that CBBR Plus has done. So we've got an ISO 22 Nexus message standard that we expect the instant payment systems to fit. So if there's any translation that needs to happen between whatever they use domestically and the Nexus standard, that will be the part of the implementation project that needs to be done at the instant payment system.
Okay. Where I lack on clarity in my understanding, Mark, is on issues about governance and accountability. Let me pose three concatenated questions, because first of all, I would say these initiatives, when presented to the public, usually they are not well explained. And I think it's that what you're explaining is extremely valuable. My first question would be, what's the purpose of the initiative? Because usually it is very vague. You have started to narrow down what you expect, what you are aiming to, but I think it is very important to be very precise. Just to say that you are addressing the cross-border issues or the cross-border obstacles, I think it's too vague. But and you were much more definitive in your explanation, so that is to be appreciated. That's one thing, to define precisely the objective, what you are aiming to. Second is how you will measure and how you will assess success. What are the criteria by which you will be able in the future to say it has been a success or it has been a failure, and that to be made as clear and public as possible. And the third one, which is also linked to them, is what will happen if it is a success and what will happen if it fails. Because we should know how to react in due time when the initiative, the project is finalized and there is the evaluation moment.
Yeah. So Nexus. So the project initially started at the BAS partly because of the G20 guidance. And that has funneled the project through the BIS and is now part of our mission within Nexus as well. As I mentioned, we're a non-profit. We're not a commercial company. We're owned by central banks, and our objective is to get to the G20 goals. So the G20 goals are about transparency, speed, cost. Exactly. And so that's guiding what we're trying to do. So we're trying to get those cross-border payments below 3%. We're trying to get them to, well, the goal is below an hour, but we're basically connecting instant payment systems. So we're certainly far beyond that. We're sub 1 minute, sometimes closer to 10 seconds end to end. So it's about speed, it's about transparency of cost, and that's the way Nexus was designed. So as a sender, when I do a Nexus payment, I have full transparency about the amount that's going to be debited in my currency, the amount that's going to be credited in the recipient's currency on their account within that timeline. So I'm getting clarity. Okay, I'm not sending funds from Singapore into Malaysia. That's going to take 15 seconds. And this is the amount in Malaysia ringgit that will end up on the account, and that will need to be below 3% of cost for that particular transaction. So that's what's driving Nexus, and that ultimately is also what defines, I guess, success of Nexus. If you look at our initial use case, we're focusing initially on retail P2P like payments, remittance payments. That's our initial use case. We are most of these bilaterals actually quite quickly evolve into also catering for commerce, like retail commerce, like either QR code based or e-commerce. So that's certainly an area where we'll expand into, because we'll probably need that additional volume to also get our cost base under control. But it is initially focused on pure person to person remittance payments, bill payments, regular account to account transfers. We're starting in Southeast Asia, partly because that's where the initial momentum was in the market. That's where these bilateral connections started. So that's our initial focus. So the 5 central banks that are our current shareholders are Singapore, Thailand, Malaysia, the Philippines, and India. We'll have we've got quite a bit of interest in the region itself. So we'll expand as these markets expand. But you may have also seen the announcement of the ECB as well. They have been part of the project as part of the BIS project a couple of years ago already. So they've been on the journey with us, and they're very much working to connecting into Nexus as well. We'll then expand our footprint, of course, to Europe, and we'll grow as we go. Are we out for world domination? No. We certainly see a few initiatives that address the same problem. So Buna is, of course, a prominent example. Box in Africa is an example. So there are multiple of these initiatives that address that same problem. There are completely other solutions, of course. If you look at stable coins, and there are other solutions that address the same problem. In the end, we're driven by getting those G20 goals. So whenever we get those G20 goals done through either which way, if it's partnering Buna, if it's adopting stablecoin along the way somewhere, we'll do that. But we're driven by the G20.
I mean, that's a thing that does worry me a little bit, that last point you raised. There seem to be so many initiatives now connecting instant islands around the world. There's Swift, right, who's traditionally his job is that they're doing all sorts of stuff. There are private initiatives like Wise and Revolut. There are, I think, several even within the BIS. There's CBDC, there's stable coins. Isn't there a risk that we're fragmenting our efforts and not going to get one single interconnected world?
Sure, that risk, I guess, always exists. So and we're not trying to solve that, I guess, holistically within Nexus. But the two things that I think sets Nexus, or a couple of things that set Nexus apart, is so the first thing, of course, is Nexus is uh, using what's already there in the market today. So we're not building anything new. We're not doing very big. Look, stablecoin is or CBDC. They're very interesting solutions, but they're starting from scratch. They're starting from point zero. While we're using what's already there in the market today. All the banks are connected to a domestic instant payment systems. All the customers have an app. They're onboarded. They have a bank account. So we're starting from the place where this is already existing today, or we're just bridging that, that gap. So that's one way. The second thing is that we've, as part of the previous phases of the BIS, already also started looking at, okay, if we're connecting domestic instant payment systems, but in some jurisdictions there's either already a network in place. So for example, in TIPS in Europe, you have multiple jurisdictions connecting to TIPS. In Buna, you have multiple jurisdictions connected to Buna. Would we be able to connect like a network into and conceptually, that's possible as well. And then the third thing, and that's something that's on our vision board as well, is conceptually we could connect into either a CBDC or a stablecoin. For us, that would be a settlement mechanism that we would connect into Nexus as well. So we need to look at eligibility criteria and participation criteria. But from a technology perspective, we would be able to connect a country that is fully onboarded onto a stablecoin or a CBDC into Nexus, and then have a stablecoin settlement on one side, and then have an instant payment settlement in the destination country on the other side. Again, there's future thinking, and we'll need to do some more work on this, and we'll start with just proving Nexus and making sure that it works, and we can connect those domestic instant payment systems in the larger countries. But yeah, there is that option of expanding and connecting to those initiatives as well.
Okay, could I ask you that, because not that long ago we had an episode here about cross-border, and we were touching on Nexus there, but it was mainly focusing on one leg out, the European OLO scheme by the EPC. And at the time I was asking Javier, so how does that relate? So do we need OLO if we have Nexus? Or do we need any of these national or regional activities bringing things together if we had Nexus? Would we even, I mean, taking it to the extreme, do we need tips if we have Nexus? So how and where does a national versus a regional aspect versus a global aspect like Nexus sort of compete or interact, or how do they come together or not?
Yeah. So Nexus connects instant payment system operators together, right? So we're not connecting directly to banks. So we'll need to have a local operator that has implemented instant payments, has got a live product, and has got banks connected, and has got a system that's up and running. So we'll need something like Tips or faster payments or Swish, or a solution that caters for that hub in a particular country to connect into Nexus. That's the way Nexus is designed. It needs to have a domestic scheme because that will dictate the rules and the penalty, eligibility, liability, dispute management, which you can use to then supplement with these are the explicit rules that you need to add onto your domestic scheme that are applied when you do a Nexus transaction through your domestic scheme. So there needs to be a domestic scheme. If there's already a cross-border scheme like OLO in Europe, that helps in that process. It's not a requirement to connect into Nexus that there is a one-leg-out scheme, but it certainly helps because again, it standardizes that process of applying all those elements that are part of a scheme rulebook for that particular transaction.
But I think you need precisely to, even when you have all the technical connections, you need to distinguish different kind of traffics. So if you are in a jurisdiction, you need to identify those transactions coming into and getting out because of compliance issues. So even if there is full technical connectivity, you still would need to distinguish one kind of traffic from the other. So how I see it is that, yes, even if there are several ways to connect, you will still need to identify cross-border traffic for compliance reasons and the domestic traffic. But I also would say that even if there are multiple ways to connect, that is something positive because then there is more ample choice. There are several ways too, and more competition as well. So even if there is some kind of overlapping of solutions, that I would say from its very existence, you do not derive any harm. So if that is good, then maybe they merge, or maybe there are ways to connect more intimately. But I think that every initiative helps to have a closer world. So in that sense, I think it's a positive idea because it helps bring together different ends. But still, what I wanted to point out is that even if there is technical connectivity, you need to distinguish the different kind of traffics.
Absolutely. And so it's actually quite an interesting point because when we started this project about 4.5 years ago, the initial starting point was, can we make this? Can we design Nexus in a way that 100% uses whatever is in these domestic regions? So it will be a domestic transaction on one side, it will be a domestic transaction on the other side, and we'll just cross that bridge. And mainly because of compliance reasons, and partly because of user experience reasons, that wasn't 100% possible. So we can't make it invisible for a customer to send a payment that is actually processed. It looks like a domestic payment, which processes a cross border. You really can't do that. So that there will be. It will be a separate payment flow that will need to be implemented by the IPSOs and the system operators and by the banks, and it will be visible as such also to the end customer. So it's slightly more work. It is of course a lot less work connecting into Nexus than it is to build all these bilateral connections, integrate with all these separate solutions separately, and it offers a way for the banks in these markets to compete with the Wises and the Revoluts of the world. Hopefully.
Could I ask you one more on the interoperability there? Because, here in Europe for whatever, last 2, 3, 4, whatever years, we had these big talks about, how can we get things more interoperable? So we have more and more account-to-account systems, and they each doing their own thing and not working well together. And so we now have, you may have heard that, we had the EMSA model, a roaming model, and a hub there. We had the EPI, a different approach. Now they are talking, and maybe they are creating some interoperability. But couldn't Nexus play a role in that or being an alternative to interoperability? I mean, you mentioned peer-to-peer more, but you seem to be open to retail payments as well, C2B. So would that be an option to use Nexus for our European interoperability?
So that's certainly so. Whether it's going to be solve European interoperability, I won't make that claim. But QR code payments or P2M payments is certainly on our roadmap. It's one of the first things that we will look into after we go live with the basic solution. It is a big driver also in the Southeast Asia region. Again, we see these there are different solutions in each of these countries. And again, these bilaterals allow you, as I live in Singapore, I'm a Singaporean bank. The moment I go into Malaysia, I can go into any stall or any market, scan the local Malaysian QR code with my Singaporean mobile phone, Singaporean bank account, and that will trigger a transaction from my account into Malaysian ringgit at that particular stall. That payment experience is absolutely flawless. And that goes through that bilateral linkage. So it sits on two levels. It sits on the interoperability of the QR code. So it standardizes the way that QR code transfers the information about the amount and the transaction and the merchant. And then it's the payment going the other way from my account into Malaysia that again use that bilateral linkage.
And
yeah.
Mark, I don't understand one issue. When you say you connect the domestic systems, do PSPs participating in a domestic system have the choice to join that cross-border link, or are they mandated to join because they are already participating to the domestic system to join inevitably the cross-border platform? How can you claim to ensure that any merchant or any participant or any account in one domestic market is reachable?
Yeah, very good question. So ultimately, that's an implementation plan and decision that needs to be written by the payment system operator in the country. We have put requirements regarding participation in our scheme rulebook. So you can imagine, again, there are lots of instant payment systems across the globe. Some of them are a lot more mature than others. Some have a lot more penetration than others. We have, and as part of the, whenever a new country comes to Nexus, I want to join Nexus, there's a checklist and an onboarding protocol that looks at what's the adoption rate, what's the use cases that are supported, what's the value limits that you impose on your domestic system. Do you have a national proxy directory that we can use to address payments? What's the compliance capabilities of the participants in your country? So we have a list that they will need to go through once they onboard, and then in our scheme rulebook that the instant payment system operator needs to adhere to. They become a direct participant of the Nexus scheme. There are requirements regarding participation. So yes, we'll need to make sure that we're not going live with a country that has two small banks and a coverage of 20%, because then in the end you're getting the perception also that Nexus doesn't work towards that particular country because only 80% of the payments are not working. So we need to get to a level of quality that gives that assurance. So that's part of the scheme rule.
Yeah.
I'm interested in your operating model. You mentioned that you sort of carved out Nexus out of BIS and made it an independent entity. I think that's what the BIS also did with Embridge, with the CBDC connection. I mean, that sounds very smart to me. Once it sort of left the pilot and sort of trial stage to turn it more into a volume play. Would the next stage then be to create a proper for-profit company and become another market player, or is that going too far?
No. So we're incorporated as a non-profit company by guarantee. We are owned by the 5 central banks. We have got two uh, uh, two models for new jurisdictions to join Nexus. One model is where they join Nexus as another owner. And then they get a seat on our board. They'll be part of the governance of Nexus. And we have a participation route again for smaller countries or countries that are due to whatever jurisdiction are not able to join to become an owner of Nexus. But we're owned by central banks. We're not going to be a commercial company. That's not the route that we're going into.
No,
Well,
makes
I
sense.
guess that is good news in terms of cost, which, of course, one of the big problems of all these cross-border and worldwide transactions is the horrendous costs still. And cutting them down, I think it's a good start if the central hub isn't for profit. So, but then there are other players in the game, especially the FX providers, liquidity providers, I guess. Do you have any rules, or is there any governance on or caps on fees that they could command, or do you think it's enough competition? Do you have many of them? Do you have limited numbers of them? So how do you ensure that the overall cost is coming down?
Yeah. So this you can imagine this is a tricky area to move into, because we're balancing we're balancing quite a few competing interests in the sense. On the one hand, the success of Nexus relies on the participation of banks allowing this in their mobile banking apps, promoting Nexus. The same goes is true for instant payment system operators, and so it is a delicate balancing act. We're trying to get to below 3%, and for some of these corridors, it will be a lot lower than that. But if we're dropping the overall fee, if we're reducing the cost of that transaction, it means someone is actually paying that difference, right? And someone has to fork out the difference. Is currently making a lot of money on this. So we're looking at this from several angles. So yes, we've defined elements in the rulebook. So we designed a pricing model that we believe is fair and that distributes value to all the players involved, whether you are a sending bank, whether you're a liquidity provider, whether you're an FX provider, whether you're an instant payment system operator. For each of these roles, we've defined a model. Some of these are very prescriptive. So when it comes to the scheme fee that Nexus charges, if it becomes to the fee that the destination bank charges to their end customer, those are prescribed in the Nexus scheme rulebook. Some of them are more, we left that open to the market up to a certain extent. So there's a bit more freedom to, as long as there's transparency, the source bank, for example, can define their own fees up to a certain extent within that bound. And that's to cater for local market practices. Some of these banks, some of these markets have different practices with that. In the end, we have a monitoring in place as part of the scheme rule to get down to below 3% and get that G20 goal. When specifically looking at the FX rate, that's something that's where Nexus, I guess, differs from already the bilateral connections that are existing today. Currently, in the bilateral connections that are linked, it tends to have a single party that's responsible for the FX. So the bilateral connection contracts with DBS, Deutsche Bank, HSBC, whatever bank is able to provide that corridor when it comes to liquidity, they're contracted to provide the FX for the next 2, 3, 5 years, whatever the contract dictates. That's not how we work. So we have an open FX market in Nexus. So we invite both the global banks that are able to provide these codes, as well as smaller, very dedicated FX like StoneX, or there are a couple of players that are currently very active, for example, in the dynamic currency conversion in cards, that are very interested in participating in Nexus. And the fact that you have a competitive marketplace for that particular corridor, and where the moment the sending bank says, "Oh, I want to send 100 euros into Singapore," they do an API call to Nexus, and we'll give them back the list of quotes, the list of FX rates that each of these providers gives them for that particular corridor. And then it's up to the source bank to actually say, "Oh, my preferred provider is X. I see that they're more expensive. For this particular transaction, I'll go with Y, or for this particular transaction, I'll start talking to my FX provider, my preferred FX provider, to get them to offer a more competitive rate." So giving that transparency also on the rates, and opening that market not only to the global banks, but also to specialist FX providers, which currently do not act in that retail market space. The goal is that will bring down the FX rates as well.
That's pretty disruptive. Yeah.
I have a short question, or just for you to confirm whether I'm wrong or not. But listening to you and reckoning that it is taking years for the BIS and Nexus to build a fully fledged solution for a regional problem which was well identified and had the appearance of being a business case for a new solution, is that not evidence that the problems identified at the very beginning were real ones, that there were reasons for the slowness, for the lack of transparency, for the high costs, that it was not simply someone exploiting a market gap or a market failure? It's a real problem which is not easy to solve, and even if you intend to bring a solution, it will take years to overcome the problem. I'm wrong or more or less right?
Well, you're not wrong. You're not wrong. It took us 4 years to overcome the technical hurdles, to come up with a Nexus scheme rulebook that's sufficiently detailed enough that addresses all these concerns. We still haven't finalized completely our commercial discussion, so that commercial model is still being debated, because these are very challenging things to overcome. So it's certainly not an easy problem to fix, and if it was an easy problem to fix, it would have been fixed already, right? So that said, we've been working for 4.5 years on this problem. We've come to a solution design which we think is addressing this problem. We've got the funding from the 5 central banks. We have the commitment from the central banks and from the operators and these local markets to bring this to market. We're about to finalize our contract with our technical operator, so we're going to go into the production build phase next year, which means that yes, it's not an easy problem to solve, but yeah, we're actually in the process of getting very close to providing a real solution.
Fantastic. I think our time is gradually up. So unless any of my colleagues here have any burning questions, I would call it a halt. And really thank you, Mark. This has been really inspiring. Also given us lots of food for thought in Europe about interoperability in Europe, not just in Southeast Asia and globally. And Ralph pointed to some really lovely topics there. Yeah, I've always been wondering why everybody's always talking about Nexus and not about the 20 other BIS projects. I always thought Nexus just had the best PR department, but no, actually, you have some very smart ideas and some very smart people like you. And all power
Thank
to
you very
you.
much.
Sounds like you're really
Yeah.
solving a real problem for real people. So thank you
Thank
very
you.
much, Mark, for being with us. And
Thank
thank
you
you
for having
to
me.
Javier and Ralph for another well, hope excellent podcast. And thanks to all who are listening and watching. See you next time.
Mark, thank you very much, and I wish you all the best.
Thank you. Thank you. Thank you.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.